Right, so we took this trade on the 31st on a Friday. So I'll just be breaking down my thought process of what I was looking at and how we managed to catch this trade. So first things first, we will start on the weekly time frame just to have a look at what was going on with price. So having a look here, it's quite apparent of what's been happening and what we could expect as well. So having a look, obviously we've got this whole range that's happening within here. So you got the high and then the low, and we're kind of stuck in between on the weekly time frame. But just taking a closer look, right, what happened was we tapped into a monthly order block, and obviously with that, selling pressure came in. We saw a massive push to the downside, but what we failed to do is go any lower. We failed to take any liquidity, and we failed to tap into sort of, you know, these areas or go any lower. We pretty much stopped there and we ended up moving a little bit higher. So this is pretty much the way I see it. Is price came down and obviously has generated liquidity, but at the same time, price can't fall forever, right? Price can't just constantly keep falling forever. So the way I look at it is price obviously stopped here for whatever reason. Obviously buying pressure came in, retraced to fill in a couple more orders before moving lower, which that's pretty much what happened here, right? Price rebalanced itself by moving higher, collecting a couple of those orders to then go take out these lows and to go and fully tap into this order block that we have. As the price has tapped into there, all right, what we could do is we'll go down to the daily time frame and have a look. Let's get rid of that and have a look at what's actually happening. So on the daily time frame, we tapped and we actually respected this level, right? We saw price move higher. We also saw this sweep, right? First, price obviously swept this high here and this high here. Now a lot of you might say this is not a change of character, break of structure, whatever you want to call it. Well, the reality is this is more of an internal shift, right? Obviously on the high time frame you can't see as clear, but if I was to go to the low time frames, you'll see that this candle right here, this would have been a whole structure, right? Remember, this is the daily time frame, so a candle on the daily time frame, right, when you actually go down to the low time frame, it's actually a whole leg of price doing whatever. So we need to bear that in mind, and bearing that in mind, what we can see is price obviously swept that, moved lower, respected this low, right, reacted off of whatever might be in here, which I believe might have been a lower time frame demand, but price respected it and we moved higher. Now from that happening, right, we obviously took out these highs right here, right? We took out these highs and we closed above as well. So that was my pretty much my signal to, right, now we're in a position where price has shown its intent, it's shown its hand, right? Price has had a massive spike in buying pressure, and what am I going to look at now, right? It's this daily order block, right? Because when we look at it, that would be the most obvious next target for price, is to go and tap this or potentially sweep this and move even higher. But overall, looking at that on the day, it would have been, right, okay, we've done that, amazing, now it's time to go to the lower time frame and see what we can find. So we'll get rid of this, I'll come back here. So coming into here, pretty much what time was this? This was on Thursday at 2 o'clock. Simply what I was looking at was price to retrace into this area right here, which is our demand, right? I wanted price to pretty much come down, tap us in and move higher, and that's pretty much that's it. Like, there's literally nothing else to it. It's that simple. Very simple trade, right? Where is price attracted to, right? And especially when we're seeing this kind of buying pressure, you would expect price to have that small retracement to then push higher again. So let's have a look. And as you can see, this trade was perfect in the sense that it was pretty much a snipe. I mean, price tapped it, respected it, and it was just clean, right? Price tapped into it, and respected and moved higher. So I didn't hold the trade up until the daily order block. I actually held it right to the highs, and the reason being was because, well, first of all, it was a Friday. We were coming to the end of the week, but markets were going to close, and I just thought, right, well, we'll just target that. There's no, I didn't see price going all the way up there, especially on a Friday evening. Volume was dying out. I just said, right, we'll secure the profits. But if we do look at what happened later, price went and tapped it. Now, one thing I do want to show you guys as well, right? Obviously, that was a clean trade, whatever, nice. I want to show you guys something, right? When price does this, right? Obviously, let's just say that's our leg, like that. Well, you obviously expect price to now go and break this high, which in this case, price failed to do so. What does that tell me? Well, first things first, if you're going to take a trade from this area, which obviously is something that I would look to take, you need to be very careful of these lows, right? Reason being is because these lows are not protected lows. Why? Because price failed to break that high. So for example, right, let's do it like this. Okay, now when we look at this, these lows right here, fully protected. Why? Because the high got broken and price closed. Now what about these lows? Well, price came up, failed to break. So what does that tell me? These lows are not protected. These lows can potentially get swept. Price could go lower and then go up. But what else does it tell me? These highs is, oh, my charts, right? Right, we're back. Not sure what happened there, but anyways, these highs, what does that tell me? That tells me that these highs are weak highs, right? This is going to act as liquidity. So obviously, even in normal market structure, in an uptrend, the highs are the easiest form of liquidity for price to go and take compared to the protected lows. But in this case, I saw this as a much stronger attraction for price to go and take out these highs, right? Especially because they are quite, right? Obviously, this just about swept that, but from a retail perspective as well, people, you know, especially like support and resistance traders may look at this, or you know, there's whatever else some people may trade. They'll look at this and say, all right, this is a point to get a sell from, and you have a lot of early sellers that will have their stop losses there or whatever. So it is a good form of liquidity. So anyways, you could have taken along from here as well, right? But again, your risk management has to be a little bit different here. So you could have obviously done that, and that's another 3R. But the way I would have taken this is with much lower risk, and also a much tighter risk management with trailing my stops and stuff like that. So yeah, that's pretty much the trade idea. And as you can see, it was clean, it was following momentum, it was following the trend, but that's all there was to it. There's no point of overcomplicating these strategies. As you can see, there are no indicators on my charts. There's only one indicator that I use, and that's to tell me, it's basically a divider to tell me what day of the week we are on. But yeah, that's literally all it is. So yeah, no point of overcomplicating your strategies. Keep it simple, and that's all there was to this trade.